Hello everyone, welcome to another Monday Markets brought to you by the FTX app. If you like these quick videos, make sure to like the video, subscribe to the channel, let's do all that standard stuff. Your support is very much appreciated. Let's get straight to business. The battle for 30k rages on, and we are 1 week away from quite important high time frame candle closes, most notably the resolution of this monthly time frame range. As you'll recall, the range high is as ever at 58 to 60k. The range low is the consolidation at 35 to 37k, and the midpoint is in the mid 40s. If we take this monthly close at face value, it either needs to be rescued to suggest some sort of reclaim. If it doesn't, it looks like a breakdown from this larger consolidation. In any case, the bullish case relies on strength back above 30s. While it may seem like closing below would be a breakdown, and that's true, it doesn't necessarily mean a death sentence. So just like here, you had a close through the range high, which eventually didn't go anywhere, closed back within the range other side. If you get a close below 30k, but eventually finds its way back into the range low, that becomes tradable into the range midpoint, if not the range high. In any case, it's one of those things where if it closes below, you're going to have to treat that as a breakout until proven otherwise. And the earliest you can be bullish on the monthly time frame would be a close back within the range. Let's say the next candle would have to look something like this, or eventually the candle would have to look something like this, right? So back within the range, whether that's this month, next month, in 3 months, whatever price action takes the market back within 35 to 37k, that would be constructive. There are clear trade targets for that in the form of mid 40s and 60k, but that needs to come to fruition. If it closes below, you treat that as a breakdown until proven otherwise. And as we've discussed, the breakdown targets are, if it gets really scary, 14k is the next monthly level of support, if this is a straightforward monthly breakdown. And then there's also the 200-week moving average, the larger kind of trend following sign in the mid-20s. One thing I will note is while it does look like the 200-week moving average is kind of this neat knife-catching tool for macro bottoms in BTC USD, as we've discussed before, just between the candle body closing at the level and the wick, there's like a 30% extra deviation at the 200-week moving average. It doesn't look like it, but if we turn on log and kind of zoom in a little, it looks obvious in hindsight as the market kind of respecting that level on a closing basis. But if we just measure the close to the low, that's 27%. Can you imagine buying the level where you think the market has to bottom, it's super cheap, super discounted, and then having to eat shit for 30%. It's not easy, right? Especially in the moment. So I think at least for mental models, if you're going to be targeting the 200-week moving average, you need to be comfortable with the idea that it may dip below the level itself and trade below 20k, even if it does end up holding on a closing basis. So I think if you're going to punt the 200-week moving average as some sort of bottom, you either wait for it to close above it and for the dust to settle if it's a volatile move, or you try to scoop it at a discount relative to the level itself, even if you ultimately think it's going to hold. In any case, while I get rid of this, to go back on the monthly time frame, here we go. At the moment, the market is below support. If that changes, you can be constructive towards the midpoint and the range high. If that's a close below, treat that as a breakout until proven otherwise. To meaningfully shift bias and to signal continuation of this range, you need a close back within support. And it may seem like that's a late signal, but if you look at what happened at the range high, you had a close through, close below, and then only the next month gave you the impulsive move to the other side of the range. There's a couple months of price action that reestablishes the level as resistance, so presumably there would be some time to reestablish the level of support as well. Perhaps not, but the momentum play will be rather apparent in any case. Let's go to the weekly time frame and see what's new. The answer is not much. Basically, the market's been churning and consolidating ever since it spiked through the summer lows, as we discussed as our kind of first target for any sort of downside move. And the reaction has been kind of mechanical. As we'll discuss in the daily time frame, we haven't seen like overt signs of strength, like a shift in market structure or something like that following the puke. It's just more sideways, right? Now, on the weekly time frame, it's been a very, this is the record number of red candles, consecutive red candles. Not gonna bring in any casino logic that, oh, this many candles were red, so the next one has to be green or has to be red. I don't think that's very helpful. We can view the market relative to key levels. I still think the summer range low is very important, and it's especially important to have clear levels of either absorption or invalidation or like some sort of shift in behavior when the market is this one-sided, right? So if you're trying to catch the higher low at 38k, you had a rough time. If you're trying to catch it at 36k, you had a rough time. Even this kind of range low initially at 32k, it's just been blasting through everything. So I still want to see some signs of absorption. As we've said, the monthly time frame needs to kind of rescue it at 35, 37. Perhaps we get a faster signal on the weekly time frame. My level for that has not changed. I still want to see a weekly close above kind of 32.2, 32.3. I know Don has got this entire candle structure as his range low and potential bearish retest level. I think that's totally reasonable if you want something more conservative. In any case, it generates a very similar idea, which is to say that this entire way down, the market has just been breaking range levels. So to see a shift in behavior, you want to see a break which doesn't lead to more continuation, but actually gets absorbed a little bit, sidelines, and then trades back within the range. That becomes risk defined with whatever price action this is being your low, and re-entering the range would be your bullish signal into some sort of larger mean reversion. Now again, that isn't necessarily like a trend reversing level. The larger high time frame macro, all that stuff, we can separate that from just short to medium term range trading, right? You can commit to a mean reversion and just suggesting that the market's going to bounce without necessarily thinking it's going to go to all-time high the next week. In any case, the case for a bounce, if you're not going to wait for the monthly time frame, I think the earliest you can make a decent case on the weekly is this type of failed breakdown above 32, 33k. If you're conservative, the take profit for that is just a very simple retest of the pre-breakdown lows at around 38k. I have a feeling if that does end up being a deviation, it'll squeeze a bit higher than that. Maybe somewhere towards this kind of lower high area in the 40s, right? This cluster that we've discussed at length in previous videos here. That would be kind of a decent first target if this ends up being a failed breakdown. But again, there's a whole bunch of ifs. For the time being, just like the monthly time frame is below support, the weekly time frame is also below support, and I want to see at least that shift before I have some sort of risk defined punt on the long side. As for the daily time frame, I don't want to read too much into this. It's kind of just chop. Arguably, the market is trading and respecting this pre-breakdown cluster here, but not being terribly specific with levels. No break in market structure or any meaningful shift in behavior yet. Perhaps a daily close through here would be a good sign. On the 4-hour, I think, again, Don, to his credit, has this range nailed down. There's an interim kind of very clearly defended resistance level at 30.6. And depending on where you draw support, it's 28, 29 around the 30k handle, and that seems to be our intraday range. If we get quite surgical with the price action and view it on lower time frames, we've already had one fake out at resistance, which didn't get accepted, and the market has been finding resistance at that same level ever since. I think if you get a clear 4-hour close through this level, it's one of those double fake setups, which is to say, when you get a fake out at a very clear high time frame level, if the market trades back above where the fake out takes place or took place, it's rather unlikely that you get a second move just like that into a puke, and at that point continuation and expansion through the range is much more likely. So maybe like a 4-hour close through or acceptance through 30.6 would be a decent signal. The market's been pretty clear with this type of level, so something worth watching out for on lower time frames. But for now, resistance, resisting, support, supporting, not much to write home about. And the other point I would make is these levels are getting really beaten up. There are like 4 or 5 tests of resistance at this point, similar for support. I wouldn't trade them in the same direction. So that's to say, if the market pushes through resistance, I don't want to sell it until it, for example, fades back within the range, and at that point it becomes sellable. And the same for support. It's been tested so many times. If it reaches there, I probably don't want to be a buyer of the 4th or 5th test. I'd want to see it try to break down, not get accepted, and trade back within the range to give me something risk-defined. I don't think the levels are fresh enough to trade kind of in the same direction or on their own anymore. So if you get a range break, I think what I'm going to do is leave it, and then if it wants to trade back within the range or offer a failed breakout or a failed breakdown, that's perhaps the appropriate area to step in. And that's just pure intraday commentary. The monthly time frame still needs to do some work, and even the weekly time frame hasn't aligned with strength yet. The final thing I will note is that, let's take a look at this via Coinalyze. There's been a decent bit of build-up of longs within this kind of 4-hour consolidation we've been in. So if we take a look at even just the Binance perp, take a look at some rather straightforward data. And I'm going to, 4-hour chart might show this quite well. We're going to look at open interest, stablecoin margined, coin margined, and funding rate. And if we look at kind of, we don't need the, oops, that's liquidations. Hold on. Yeah, I want the open interest for stablecoins. Here we are. Okay, so if we look at what the market's done, it's just been moving sideways in this range ever since the low at mid-20s, right? But if we look at what futures are doing, there's seemingly some aggressive positioning going on in futures, betting on the upside resolution of this range. This is evidenced by open interest making, well, increase. Oh, that's a black arrow. You're not going to see that. Neither am I. So essentially, while price has stayed more or less flat in the range, you've got open interest across both coin margined and stablecoin margined contracts making higher highs. So there's a lot of speculation going on within this consolidation. Now, while it's true that there is one long for every short and one short for every long, it's 1-to-1, the fact that OI is built up and funding has also flipped from negative to positive, which is to say that derivatives are trading at a premium to spot, and also I think CVD is up as well. That generally insinuates, again, it's not perfect science, but to me all of that suggests that longs are being aggressive on the future side of things, but price is not reflecting that yet. The market needs to get a move on if these positions are going to get bailed out. Generally speaking, when price diverges from aggressive positioning in futures, that's a kind of a reversal sign, right? So if futures are being bullish, pushing higher highs in open interest, funding, etc., all of that new positioning, if price isn't following along and also making a higher high, that would suggest kind of a stronger hand soaking up all of those fresh positions and all that aggression in the futures market. So that needs to get moving soon. Otherwise, it's just more open interest to unwind and flush to the downside. That's kind of it for BTC USD. As you can tell, just kind of a summary of these views. Monthly time frame, still no reclaim below support. Weekly time frame, still no reclaim below support. Daily time frame, ranging 1 hour to 4 hour, very clear range. So that's it. As far as ETH USD goes, not much to say on the monthly time frame. It's slightly jarring how we've left these summer lows in and this beautiful looking wick double bottom around the 1600, 1700 level. I would prefer to see some sort of poke, spike, breakdown attempt to, kind of clear out those lows convincingly. We didn't get it. We might get it later. In the past, the market's left these in for a long time, so it's not some imminent reversal signal, but I would have slept slightly better at night knowing that that's been kind of spiked and traded through. I think the main narrative on ETH USD is really on the weekly time frame, looking back at this prior range high to range low inflection point, being generous with the level here. It's 1800, 1900, maybe 2k round number. For the first time in the last couple of weeks, ETH has actually reached weekly support, and unlike BTC USD, it's actually held it. Now, the bearish argument for this would be that, well, Bitcoin is trading below support. In the past, ETH has simply lagged Bitcoin price action, so eventually ETH is going to also trade below support. I think that's fine. That's a reasonable argument, but this is still, if you take it at face value, kind of the structural trade or setup that it is, this is the first test of ETH's long-term range low. Like when this bottom happened at the 2K handle, this is with Bitcoin hitting 30K and hitting its range low, and ETH was kind of dragged up as an unwilling participant, even though it didn't really hit any convincing bottoming structure. And that's kind of what I think made a lot of this price action quite awkward, because ETH never got the chance to test its range low while Bitcoin was hammering away at 30K. And now that Bitcoin hit 20 odd, ETH got a chance to retest its real kind of range low, which for me is close to 2k, 1.8, 1.9, and that's what's generating this bounce. Purely from a structural point of view, I quite like the look of this. It's one of those first test, the best test type of levels when it comes to retests. Usual caveats apply. If Bitcoin keeps looking like shit, the likelihood of ETH longs working out is lower. If the S&P nukes, all of this nukes, yada yada. But like purely at face value, looking at this structure, it's at support and it's closing off support, and that's pretty constructive, right? Obviously, if you lose this on a weekly basis, 1800, 1900, if this rolls over, then it goes back. The Goblin Town target one is 1400 and then closer to 1k. But as far as big levels go, just like I thought 30k BTC the first time it tested it was decent for a bounce punt, ETH is at its equivalent decent for a bounce punt level. So I'm sure you've seen a lot of commentary on Twitter about mean reversion or just a bounce in the markets in general. I think if you're going to express that view, ETH is probably one of the better instruments for it, given it's actually holding support and has clearer structure, unlike BTC, where you're buying, hoping it reclaims, even though it's still below the level, right? And again, I think a reversion here is pretty reasonable as long as the weekly structure is intact. Targets-wise, not asking for a lot if everything bounces, and again, by everything I mean including risk assets like the S&P indices, whatever. If those don't bounce, it's unlikely that we go super far. But just on a level to level basis, moving from support in the form of the long-standing range low to resistance in the form of the broken support at 2500, that would be a sensible rotation in my mind, and not asking the market for a whole lot. Yeah, the worst case maybe if the markets do pop, that it gets front run and smack down at 2300 at this daily cluster. But generally speaking, if markets are going to bounce before they hit everyone's Goblin Town targets of close to zero, I think the 1700 to 1800 area on ETH is a decent candidate for that type of bounce. Otherwise, it's just straight down, new economics, it's all over, yada yada. So that's kind of on my radar for ETH USD. I want to see this week, again, close above support, maybe even come back and test it. I didn't get any orders filled. My personal life's been a bit of a mess, but no one cares about that. Thankfully, we're here to talk markets. I missed out on buying this weekly structure the first time it tested. So something I've got on my radar, and as we discussed per last stream, not only the structure in general, but now that we've had a couple of weekly closes there, if the market wants to come down and spike this previous week's low, right, which I've outlined here in red. If it wants to come back, spike that into support, and then trade through it, something like that would be pretty attractive to let me in. And then looking to punt that towards at least the top of the local range, if not higher towards the weekly target at 2500. I'm not sure there's anything else I'd want to add on the daily time frame. It's just kind of chop, congestion, etc. As the market has slowed down at this weekly support. So TLDR for ETH, the double bottom on the monthly, weekly, etc. slightly uncomfortable. The weekly appears to be holding really the only strong support it has on this range. I might have already missed the move. If I haven't, I'll be looking for a quick spike of previous week's low, looking for at least the range high, if not a larger move towards 2500. And I do want to add some context to these setups. If they trigger, these are very casual kind of trading, buying support, selling resistance, mean reversion setups. And my risk management and sizing for that trade will reflect that idea. There's nothing crazy in terms of betting on a macro bottom, new all-time high next month, or, these are loosely held views of just punting what I believe to be good levels if the setups present themselves. I know it's very kind of clickbaity and attractive to wave the flag around that this is the bottom, pile in all your risk and the pain is over, we're all going to make it. But until proven otherwise, I'm just going to assume we're in a kind of shitty Fed macro-driven reversionary environment. And if the market offers me bounces, I'll take them quickly and without marrying any of them. And I'm sure that remains to be seen over the course of this coming week. As far as macro stuff goes, do listen to the Casual Friday I did with the Duck, where we talked about indices and stuff like that. It will be a very nice meme if after officially entering a bear market by dropping over 20%, you get a bit of a rally in equities. But obviously, from a market structure point of view and everything else, nothing too sexy going on with these boys. Certainly not on a higher time frame kind of market structure basis. Maybe the monthly close will be instructive for NASDAQ if it finds support within this large cluster. That might be suggestive of a bounce, but this is very much into tea leaf territory, and I don't have a whole lot to say there, which I have conviction in. So why don't we try to TLDR this a bit? TLDR 1. BTC below key supports on all time frames. Lol, come on. Monthly reclaim of 35, 37 would be good. Earliest bull signal on high time frame would be weekly reclaim of 32, 33k. Close above the range for a change. Neither in play for the time being. Tight intraday range capping price with some aggressive futures positioning that's seemingly being absorbed. Levels within low time frame range are beaten up. If it breaks, let it rip and trade the levels further away and or the move back within the range if it's not accepted. Boring, but when stuff is below high time frame support, gotta be patient / cautious. If bet on bull reversion, ETH/USD looks reasonable. Specifically, weekly close above 1.7 to 1.8k weekly is a nice bounce now or go to 0 zone. Cred can't get an order filled to save his life. Looking for sweep of previous week's low, potentially to gamble on a bounce towards 2500-ish. 2500-ish. In general, environment remains reversionary. Buy support, sell resistance, take profit where the market gives it to you. Still plenty of time for high time frame charts to catch up. Stop looking awful. I think that's pretty fair. Ooh, that's too big. Here we go. Nope. Here we go. So yeah, TLDR, Bitcoin below key supports on all time frames. As we said, it's below the monthly, below the weekly. Like one of those needs to kick in to be attractive. Even the daily hasn't, 4 hours still in the range. Daily still just moving sideways. There's no like clear evidence of absorption. Maybe the fact the market has slowed down is in itself evidence of absorption, but as far as buying strength, it's not there yet. It's close. Maybe it gets rescued end of month. The fact that the weekly candles are getting smaller maybe suggests some fatigue, but in terms of reclaims or overt signs of strength, it's just not there yet. On the monthly, that's 35, 37. If you want to just wait for that, that's fine. If you want to be early, you can either punt now, which is not in my purview, but I think the earliest higher time frame signal would come on the weekly time frame above 32, 33k, and that would set up this week if it sets up at all. And as we discussed, there's a tight intraday range capping price. Futures are being quite aggressive and still getting kind of smacked down within that 4-hour range. The levels in that range look beaten up, so I think maybe there's a momentum trade if it goes, but really I'm not going to chase volatility this coming week. If it rips, I'll let it go, and then if it trades back with if it's accepted back within the range, that's where I might step in, or at much higher / much lower levels if that consolidation resolves into those levels. It's boring, but when stuff is below high time frame support, you got to be patient and cautious. And also, just in general, guys, like just as far as context goes, it's completely fine to look at this and say, yeah, it might bounce, but I don't care. I'll wait for something clearer. That's totally fine. The issue is it's been going down in one direction for so long that people want to catch the bounce trade and it'll make them feel good. But there's nothing wrong with saying, look, there's probably going to be a 20 to 40% bounce at some point. Could be now, could be later. Whenever it happens, I don't want to bet on that. I want to bet on either very clear strength or some sort of Armageddon mega nuke, and stuff in the middle I'm not interested in. And that's a completely, totally reasonable perspective. Don't let social media blinders tell you otherwise. As far as betting on the bull stuff or reversion, I think ETHUSD is at least at clear levels, unlike BTC/USD, which is below clear levels. Specifically, the weekly close above the range low would be nice, and that's kind of what we've been getting at 1.7, 1.8k. It's one of those do or die zones, just like BTC 30k was a nice do or die zone. ETH 1.8k is a similar structure. I'm unfilled on ETHUSD, but if I get a sweep of previous week's low, that might be puntable. I got a couple DMs saying that they took an equivalent of the failed breakdown setup of the trade already. That's nice. I'm not in it, and I'm going to have to look for something else if I don't get it. And if it goes without me, as I said, that's absolutely fine. A conservative reversion target for ETHUSD bouncing from 1.8 is like 2.3, 2.5. Just something visible. Maybe a green weekly candle. Is that too much to ask for nowadays? Maybe. Going back to the general environment, I still think we're BTC 500, which is kind of a joke to say that we're tightly correlated with equities. If that changes, it'll be obvious and we'll talk about it, but that hasn't changed in a while, so you're going to have to see some evidence of that being the case. Still very much a reversionary environment. You take what you're given, level to level, buy support, sell resistance, take profit if it's available. And as we discussed at the very beginning, because looking at the high time frame chart to the left, it does let you re-enter. There's plenty of time for high time frame strength to emerge, so there's no rush to catch these bounces, in my opinion. Maybe there will be if it's just like a full monthly engulf reclaim type of scenario, but even then, that signal will be the move that would come from a signal like that is so large that you need to be early to it. So high time frame charts still need fixing, and as those start to come into play, either much cheaper or on strength, it's not there yet, but it'll become available when it becomes available. That's all I've got. Hopefully this is helpful. Let me know about this format and the summary at the end. Sorry it's so boring, but when the market's puking through levels, it either needs to stop puking or get cheap enough for me to nibble, and it kind of hasn't done either at the moment. Let's hope it does. And I also look forward to Don's trade management update later this week. He'll know pretty soon whether he's right or whether he's wrong, and I'm sure we can pick up some wisdom from his trade management, which is always nice to see live. That's all from me. Again, thank you to the FTX app for supporting Technical Roundup. Download it for the best mobile trading app experience on the market. That's all from me. Like the video, subscribe. Bye-bye.